All right, welcome back inside our proactive newsroom. And joining me now is Anthony Ginsberg. He is the CEO of Gins Global Index Fund. And Anthony, good to see you again. How are you?
Great to be with you, Steve, on this busy day.
Yes, it is very busy for sure. And we're talking about the Tech Megatrend ETF and the performance and what's been going on. I know it's been going quite well, but it is, as you mentioned, a very busy day. So why don't we talk about the election and the reelection of Donald Trump will be the next president. And stocks, especially the tech stocks, are getting a bit of a push today.
Yes, I take Megatrend, Steve, is up about 3.5% today. It's up year on year about 42% already. We actually think that there's going to be an additional tech rally given Trump's victory, because one of the first to be shown the door will be the Biden antitrust chief, who's been blocking a lot of tech mergers and M&A activity. And there are a lot of holdings that we have, large cap, even mid caps, that have actually been potential acquisition targets, but the large big tech guys have been restricted from making certain acquisitions. So I think you'll see a lot more business-friendly policies on the technology side, more acquisitions, more corporate activity coming through. And just generally speaking, I guess the view here is that there'll be less red tape. So that it's a positive for tech. And I have to say, broadly speaking, last week's big tech earnings were also very encouraging. We actually had record cloud computing earnings, which is one of our 8 sub-themes. As you know, we have cloud, cybersecurity, a bunch of AI, robotics, and other 8 equal weighted themes. But
Mhm.
cloud actually shot the lights out last week, had about a 35% gain year on year for Google on their revenues. Microsoft also gained about 33% on cloud. Amazon was a little weaker, around 20%, but it's all very much in line with AI and cloud being brothers essentially in this new revolution that we're seeing in technology.
Yeah. You mentioned cloud, you mentioned the big tech, social media, things like that. Those are all seeing rises, artificial intelligence as well. I saw today Elon Musk, his net worth just increased immensely after what's going on with this election as well. So you imagine social media becoming such a big topic.
I'm glad you talked about social media. We actually obviously have tracking an index, and the Trump uh, share is actually in there. Trump media. It's obviously gone through the roof. That's one of our holdings because we're rules based. We're actually a global benchmark, but that happens to be one of the best performers, obviously. We actually saw recently in the last month in our October report, social media, blockchain, cybersecurity, and cloud. Those are really the 4 main underpinnings of growth this year. Future cars to some extent as well. But by being equally weighted, as you know, Steve, we're able to take profits and rebalance every 6 months. But having the global benchmark also helps us, because when the dollar has weakened recently, it's a tailwind. And we're talking about tailwinds for earnings. We actually see the Fed dropping rates later this week. It's a busy week by another 25 basis points, and also another drop probably in December. That's all very positive, particularly below the mega caps. We actually, our mega cap weights are only about 10, 11% at this point. So we're actually looking at the broader ecosystem for technology, and that's where we see more acquisitions now no longer being held up. So we're very bullish, Steve, that the Trump victory will actually help the tech rally continue and be broadened, frankly. And that's partly why our own iTech today is up 3.5%.
Anthony, obviously he doesn't come into office until January, so there is still some time for that. Do you see that bump that you're seeing today? Will that continue until January, do you feel, and then sort of carry over into 2025, or will be a bit of a lag till you get to 2025?
Yeah, it's a great question. I think because there's been all this pent-up demand for corporate activity in tech M&A, and it just has stalled. Even IPOs have stalled, which is a relative issue as well about some of the red tape that they've been facing. This is all to do with the Federal Trade Commission, Steve, the FTC, and the head there, who's going to be one of the first to be shown the door in late January when Trump takes over. The problem has been is that most of the big tech guys who are the major acquirers have just basically been sitting on their hands and waiting for the election. I think that this is not a one-day event. I actually see a tech rally into next year, particularly also because of the Fed tailwinds. They're going to be at least probably minimum 3 to 4 rate drops into next year. That actually will help boost valuations, certainly on some of the growth stocks that we own in robotics. By the way, with Trump's policies putting tariffs in place against the Chinese, we do see a lot more onshoring of manufacturing. It's going to occur, and they have to automate. The American factories and automation has always been behind the Koreans and the Japanese. So we actually own quite a bunch of robotics companies. It's one of our signature 8 sub-themes. So we're quite positive that there's going to be a lot more automation spend. And just quickly on Elon Musk and things like that, he's going to be probably part of the efficiency czar movement here. And we see a lot more outsourcing of cybersecurity by the US federal government, probably more outsourcing of cloud and other technologies. So it's interesting times for our space. We actually see the private sector having a bigger hand in the federal government spend going forward.
Well, it's going to be fascinating for everyone, including the Tech Megatrend ETF as well. Anthony, thank you so much. Great insight. I really appreciate your time.
Thank you, Steve.
All right, Anthony Ginsberg, the CEO of Gins Global Index Fund.